Welcome students. This is the first video where we are actually going to be covering content relating to Financial Management 1. This is the first video where I'll be taking you through some of the content in the actual textbook, so I hope you've collected a copy of the Financial Management for the Media Executive. Obviously this is volume 1 because you guys are studying the first level of Financial Management. Please make sure you've collected a copy from campus in the basement. Just follow health and safety protocols so that you are safe when you are attending campus. First thing I want to outline in terms of contents, you'll see if you've looked at the contents page for this particular textbook, you have several chapters covering specific topics that you're going to be learning about throughout the year. Chapter 1, 2, 3 is looking primarily at the introduction, covering topics relating to financial management, the objectives and purposes of accounting and record keeping, in terms of recording information in the books of the business. And then you've got accounting equation, which is looking at transaction analysis and understanding so that you can make decisions as a media executive. We'll also look at the double entry system. And then there are other topics later on in the year, which we'll look at when we get there. You'll see there's a total of around 12 chapters in the actual textbook, and then you've got activity solutions at the end of the textbook that you can use to check your answers so that you are on track. So today we're going to be looking at chapter 1. The heading for chapter 1 is the introduction to financial management. Here we're going to be looking at key financial goals of a media enterprise. You do need to understand what the actual overall goal is of an organization. What does the organization need to achieve and what should they be focusing on? We're also going to be looking at the different types of organizations, and this might even be a little bit of overlap in terms of theory from some of your other subjects. If you've completed maybe business management or operations or any of those types of courses, you would most likely have come across the different forms of ownership. So sole proprietors, partnerships, CCs, and then public and private companies. So hopefully you have some background with regard to those types of businesses, and then you can obviously apply your knowledge to this course, but from a financial management perspective. Remember, the purpose of this course is to provide you with skills in financial management so you can make good decisions when you're a manager one day. Something else that we'll look at in this chapter is the role of financial management and accounting in organizations. So why are we going to be looking at these two separate considerations? They're both, let's say, similar but different. When looking specifically at financial management, you're looking more at decision making. When you're looking at accounting, you're looking more at the record keeping. So you need both because you can only make good decisions if you have good accounting records. So you need the information. A simple example would be, for example, your course outline or your subject outline. Right, if you don't have that information, you won't know what each of the levels entail. You won't know how many assessments you're going to be given throughout the year, etc., etc. So that information could be seen as like accounting. Okay, we're accounting for the amount of assessments during the year. We're accounting for the different levels of your financial management. We're accounting for all the requirements, etc. Okay, so those are things that you need to be aware of, information. And then that information needs to be applied. And that's the hard part. Most of you will probably struggle with this section, which is the financial management, because you're going to have to take what you know and then applying it in context to a specific scenario. And we'll be looking at more of that as you progress to higher levels. In other words, when you get to financial management 2 and finally financial management 3, the focus is more on the financial management than the accounting. So just to give you some context before we begin, you'll see that in all of these chapters, from chapter 1 right through to chapter 12, all those chapters are primarily focusing on specific accounting concepts. A lot of the time, you're going to be looking at things like journals, things like transactions, things like general ledger or a bank reconciliation. There are a lot of practical accounting skills that you require in order to use that later on to make good financial management decisions. So just remember, I don't mind what background you have in terms of your studies. So whether you did do accounting or whether you didn't do accounting at school is not important. Okay, this particular course, the Financial Management 1 course, is going to provide you with everything that you need in order to build on your basics so that all of you have the same skill set in terms of accounting, and then you can apply that to financial management later on. Right, so there is some financial management in this particular course, but as I said, the focus generally is more on the accounting because you need the information, you need to understand and interpret the information so that you can use that information later on. And that's the goal of this particular course. Right, so the first chapter is very short, which is looking at 12 pages of information relating to the overall background and context. In other words, what are you going to be looking at throughout this year? What are you going to be covering in the different sections? What are you going to be looking at from a financial management and accounting perspective? And then the last thing that this particular chapter looks at is the agency problem. And this is something that all businesses deal with, and they have to manage and control from a decision-making point of view. So in other words, what can we do to prevent the agency problem? Or what can we do to help lower the impact or to help mitigate that agency problem from affecting our business? Right, so that's something we'll look at a bit later when we get to page 8. And then obviously you've got a conclusion and summary to end the chapter. And then you've even got some questions. This particular textbook was recently updated. So last year's group of students would have used the new textbook, this one that you all have currently, the Financial Management for the Media Executive, okay, with the branded Edge logo for Boston Media House. All right, so you are using the newest version of the textbook, so you do have the correct information, the most up-to-date information, and you have some additions that wasn't present in the textbook previously. So for example, if maybe let me just show you what I'm referring to here at the end of the textbook chapter. All right, so I see this is a Edge. It's probably a different version. So this one doesn't have the actual questions, but you guys can have a look at your textbook. Just after the conclusion and summary, if I look at my hard copy, so I'm just paging through my hard copy version of the textbook. Towards the back of the textbook, here, Activity 1C. Okay, so it looks like they've included it just before the end. Here's it. Okay, where you've got Activity 1C and you've got some multiple choice questions. Right, at the end of every chapter, you will see some questions. And this is new that has been incorporated in this particular edition of the textbook. Multiple choice questions. So please use them to help you practice, especially for your tests and exams. And that will obviously be covered with you when we cover the formal brief. So here it was given a bit earlier in the chapter. For chapter 2, I think it's at the end. Here, yes, there we go. Okay, so again here, just before the end, you've got a whole bunch of multiple choice questions. Okay, so please just use that information to help you prepare for your tests and exams. The best way to do well in this course, and I've taught many students over the years, students need to practice as much as possible. Right, so please use the opportunity to go through the activities, ask questions. You can use Cole Campus to communicate with us. You can use any form of communication, email, WhatsApp, depending on what you feel most comfortable with. All right, so that will be provided to you at a later stage. We'll create those WhatsApp groups and you can contact us if you have any information. All right, so that's just a little note about just general preparation. Let's have a look at content. First thing is the introduction. So when you look at each chapter, you'll see that the chapter outlines what the learner is required to do after having covered all the content in the actual textbook. I'm not going to read through all of this because that you can do yourself. What I want to do with these video lessons is to give you a summary and to try highlight the most important concepts that you might not fully grasp after having read the information in the textbook. Okay, all of you can read this information, so I don't think you need me to do that. and that would be pretty much a waste of time if I'm just sitting here and reading the information. Right, so I'm not going to read the information. I'm going to highlight what is described in the information, and I'm going to summarize some of the most important points and concepts and share with you some additional examples to help you better understand what's in the actual contents. So just to highlight the outcomes, okay, in terms of what you're required to do, here you're going to be describing the main forms of businesses, okay, so obviously sole proprietor, partnership, etc. You're going to be looking at the key financial goal of the business. In other words, what is the business required to do? Then you need to look at the roles. In other words, as an individual, if you're going to be making decisions and you've got financial management and accounting as part of your skill set, what role do you have and what do you actually need to do? Then we're going to be looking at the functions of the financial manager. So in other words, what do they actually have to do from an activities point of view? So in other words, their actions. Okay, obviously, in order to get somewhere, or in order to do something, you need to actually take action. You need to do the activities. You need to read the textbook. Okay, you need to write your assessments. Right, so those are things that you have to do. So the functions here looks at exactly that. What are the things that we have to do as a financial manager? And then ultimately, what is the importance? In other words, why do we need non-financial managers being acquainted with the basic principles of financial management? All of you are probably going to end up in some sort of management position during your career. So when you're a marketing manager, or when you're a social media manager, or if you're a advertising executive, those are non-financial manager roles, but they require financial management understanding. And you'll learn more as we cover more of the different levels of your financial management. So 1, 2, and 3 ultimately in terms of your 3 years of your BBA studies. Just focusing on the financial management. Okay, so obviously you're doing a 4-year degree, but most of you are doing financial management for the first time, okay, as part of your 2nd year of study. And then the last 2 notes is just look at the relationships between different role players. So we will look at the market, what that entails, different institutions that's part of the market, and their overall relationship. And then, as we said earlier in the contents page, the agency problem is something that you need to understand and that you need to obviously apply in terms of your understanding. Okay, so can you identify the agency problem? Do you know what the agency problem is? Do you know how to mitigate or reduce the impact of the agency problem? Those are all the things that you need to look at when covering this particular chapter. All right, so the first thing that I want to look at with you is the key financial goals of a media enterprise. So take a minute to think about this and decide on what you think is the most important goal. That's something that you need to obviously highlight and understand and interpret. Okay, so if I'm looking at financial goal, what would you say the financial goal is? Take a minute to think about that answer. Okay, so hopefully you've given it some thoughts. Initially, if I had to ask this to you live in a classroom environment, most of you are probably going to end up saying profit, right? That's the most common answer that I get, is profit. And there's nothing wrong with that answer. You'll see the textbook even talks to the concept of profit. And profit is obviously determined by taking your income and minusing your expenses. And that you'll learn about more later on when you cover more of the accounting. But just to keep it simple, should a business only focus on profits? So in other words, are we only going to be looking at making a profit? Well, if you think about it and you're actually thinking about the core principle, in other words, the why. Why does a business operate? The business is not going to operate just to make a profit. The business is not going to operate just to make money. Okay, that's not the point of running a business. A business, if you think about it from a more complex point of view, in other words, if you dig a little bit deeper, okay, companies, yes, they do make a profit, but not all companies are profitable. And that's something that you need to obviously consider. So if all companies aren't profitable, why do those companies still operate? So in other words, can you operate at a loss? And the answer is, of course you can. Okay, so you don't have to ever make a profit. The profit is not the main driver for a business. The why is more important. In other words, what was the business established to do? That's more important than profit. So to give you an example of this, to make this make a little bit more sense, can you operate at a loss? Of course you can. We've established that. So what business can I show you that has operated at a loss? Well, if you look at a company like Twitter, I'm sure all of you are aware of Twitter and what they provide you with in terms of being one of the social media businesses. Okay, I'm just taking you a bit further back. So I'm looking at an old financial report, okay, in 2016, looking at Twitter's financial performance. Okay, remember, Twitter is a public company. Okay, it's listed on the New York Stock Exchange. Okay, it's an American company, and this information is available worldwide. Okay, because these are public companies. Public companies, as you'll see later on in the chapter, provide information to the public. So everyone has access to it. Anyone can view that information. Okay, so you can all go and research Twitter and read about their financial performance. Do you think Twitter's making a profit, or do you think Twitter's making a loss? Well, if you scroll further down and you actually look at the contents of this document, we're going to be focusing specifically on the financial statements. And that's why it's so important for you to cover accounting in your first year of study. When I say first year, in your first level, okay, so in other words, your first year of financial management, okay, not your first year of your BBA, but the first year of studying financial management. Okay, in financial management, we're going to be learning how to interpret and understand financial information. So if you go to the financial statements, which is on page 63, here, financial statements and supplementary data, you will see all the financial statements. So we're only going to be looking at one of them. Okay, we're going to be looking at the statement of comprehensive income, or in this case, comprehensive loss. Right, there's a reason why the word loss is there. It's because Twitter, if you look at their financial statements, which I'm going to show you now, here, okay, for the year end, all right, has never ever made a loss. A profit, I should say, sorry. They've always made a loss. Okay, have a look at the information. Okay, comprehensive loss. 2013, loss. 2014, loss. 2015, loss. Okay, and these are big losses. These aren't small numbers. Obviously, the numbers are in thousands, so you've got to add an extra 3 zeros to all of these figures. So this would actually be 644 million. This would be 587 million. This would be 556 million. Right, those are big numbers, and they're all losses. So can you imagine making over a $500 million loss every single year? Right, 556, 587, 644. Those are big losses. So why does Twitter still exist today? And you could even look at more recent information. 2019, for example. Same thing applies. Let me just go to the contents page and just take you through to the financial statements again, page 54. And we look at the accounting records here. Okay, you can see that they made a loss up until 2017. Okay, 2018 was the very, 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 very first year that Twitter had ever made a profit. Right. So if you go and you read up on Twitter in terms of the history, Twitter is a very new company. Maybe we should Google that. Okay, when did Twitter start? In 2006. Well, obviously, when Twitter started, they were a private company. And then eventually they list on the actual exchange, okay, in America, obviously. And then they are listed on the New York Stock Exchange as a public company. Okay, notice the words I'm using: private company, public company. Right, so you can see here, okay, the stock price or the share price. Twitter has a share price as we sit here today, okay, while I'm recording this. This will obviously change day on day, okay, it changes all the time, that the current price is $50. Right, but you can even go further back and you can look at Twitter's share price over a longer period of time. So Twitter share price. Okay, and if we take the maximum, right, so we've got all the information over the last few years. Right, so Twitter back in 2013, okay, this is when they would have first listed on the exchange, okay, because remember, going from a private company to a public company. Right, you can see that the share price will change. Right, but have a look at what we just said. Okay, if I go back to 2015, 2014, 2013. Did Twitter make a profit in 2013? No. Did Twitter make a profit in 2014? No. Did Twitter make a profit in 2015? No. But were those companies still, or was this company still valuable? Well, you would think not, because they're making a loss. But have a look at what we just saw. Back in 2015, here, 2015, 2014, that period of time, Twitter's shares as a company were worth $40, going up $60, close to $70, $50, $40, $30, and it goes up and down and up and down, up and down. Okay, was Twitter's company ever worth zero? No, it wasn't. Okay, companies are always worth something because those companies have assets and liabilities. And that's what makes a company valuable. Okay, not how much profit they make, it's how much assets and liabilities they have. Right, so if Twitter has more assets than liabilities, they're actually a valuable company. Right, and you can see that in the financial statements. So let's go back. Here, 2015, 2014, 2013. They make a loss after a loss after a loss. But are they still valuable? Yes, they are. Let's go and look at their assets and liabilities. That we need to go and scroll up here. Assets. Total assets. Total assets, again, this is in thousands. So Twitter, in terms of assets, had, if we add 3 zeros to here, $5 billion in 2014, $6 billion in 2015. That's how much assets they have. Is that a valuable company? Definitely so. And if we compare that to the liabilities here, total liabilities, they had close to $2 billion of liabilities in 2014 and just over $2 billion in liabilities in 2015. Okay, so notice assets. The assets are more than the liabilities. So does this company have any value? Of course they do. And that's what we're looking at here in terms of equity. Total stockholders' equity. Okay, we don't use the word stock in South Africa. Okay, we use the word shares. Okay, so shareholders. Shareholders' equity. Okay, a shareholder would be a person that, or a company, okay, someone, an entity, okay, that holds shares in a company. So $4 billion in terms of equity in 2015. $3.6 billion in terms of equity in 2014. So you can obviously see that it's not about profit. You can make a loss after a loss after a loss, year after year after year. And we saw that here. Okay. The main point that I'm trying to highlight here is that you need to create value. and that's important. All right, so value is what you're going to be looking at when focusing on financial management. Okay, profit is accounting. Value is finance or financial management. Finance. And that's the big difference. Right, so accounting is just about information. Income, what is the income? What is the expenses? Financial management is taking it a step further, okay, where we're looking at actual value that's being created. Right, so I hope you understand that concept, and I hope you understand the full, the importance, the actual crux of this discussion. Okay, so something else that I want to share with you in terms of additional information is if you look at the JSE, so bringing it back home to South Africa, what is the most valuable company on the JSE? Well, if you go to this website, okay, this is a very good website for general information regarding shares on the JSE, and it doesn't require any subscription. It's free information that any of you can access and view, and that's why I've chosen to use this, just as additional information to help you understand this. Right, so here we've got Prosus and we've got Naspers. Right, before they split, Naspers was one company. Naspers and Prosus were both one company. But in the last few years, okay, this happened about 2-3 years ago. Okay, they went through a process of separating the one part of the business from the entire business. So Naspers was a lot bigger. Naspers was the biggest company in the JSE. But now that they've separated, Prosus is number one in terms of market capitalization. Right, so this is just a fancy term that's used to highlight the value of a particular company on the JSE. Right, so you can see Prosus is number one. Then you've got AB InBev. Okay, that's the holding company for SAB. Okay, so I don't know if you know what happened previously, but you can go research this. Anheuser-Busch, AB InBev, it's actually a Brazilian company. The Brazilian company had purchased SAB, and now SAB no longer exists. It's part of this company. Okay, SAB is part of AB InBev. And then you've got Naspers. And then you've got other companies. Maybe you recognize some of these other names here. Maybe British American Tobacco, okay, for any of you that smoke perhaps, okay. Richemont, okay, luxury goods. Maybe you know some of the mining companies, some of the banks, FirstRand, maybe the telecommunications companies, Vodacom, Standard Bank, Bank again, Capitec Bank, another bank, Sanlam, Goldfields, okay, these are mining companies, MTN, telecommunications again, okay, Northern Platinum. Right, so these are all different companies. Maybe you're more familiar with some of them, maybe you're less familiar with others. But that's not the point. The point is, do you see that these are valuable companies? These companies have value, okay? Even Pepkor Holdings, okay, Pep, they have a value of 53.84 billion rand. Okay, that's how much the company is worth. Right, Bidvest, Exxaro, okay, these are all different companies. Okay, Shoprite, there, Checkers, Shoprite Checkers, okay, Clicks, maybe the more commonly seen companies, maybe when you guys walk around the mall, you've probably seen a Checkers or a Shoprite or a Clicks. Okay, those are public companies. Also, very, very valuable. Do these companies always make a profit? Well, hopefully they do. But sometimes companies go through difficult times and then they make losses. So when those companies make losses, do they close and stop operating? No, they don't. Right? The reason why they don't close is because hopefully they have enough value. In other words, their assets are greater than their liabilities. And that's what we're going to be focusing on. All right, so just remember that value is the focus. Value is what businesses are going to be focusing on when they're operating. All right, so please understand that, please remember that, and please remember to apply that when you're looking at different scenarios. Right, something else that I want to show you, just adding on to what we had just spoken about. Okay, so because I showed you Twitter, obviously those are American companies, well, an American company. I want to show you two South African companies. So obviously Naspers, which I just highlighted for you. Naspers is actually a media company. So all of you are studying media. Naspers and Prosus, obviously just with a different focus. Prosus is more the internet side of things, and then Naspers is all the other. Right, so Naspers and Prosus are both in that environment. Okay, media, digital, internet. Okay, that's what we're looking at. So if you look at just some of the outlines, okay, the important points. Naspers is a global consumer internet group and one of the largest technology investors in the world. Right, they're huge. This is a global company. Right, I just want to show you some of the companies, the group overview. Maybe you're familiar with some of these names. OLX, ever heard of them? Hopefully, maybe. Takealot.com, ever heard of them? Okay, probably, maybe. Right, Media24 also. Maybe you've heard of them. All right, so those are all the different business units that form part of this huge company. Right, so this is a really, really massive organization. And remember, the focus here is always going to be on value. OLX creates value. Takealot creates value. Media24 creates value. Okay, you want to read newspapers and magazines. You want to buy online. Okay, you want to sell online. Okay, these are all different companies that do different things. Right, so just remember, value is important. This is Naspers, and then if you look at Prosus, this used to be part of Naspers, and obviously they're separate companies now. Again, just to show you the group overview here. Let's get one where we've got the different companies, if there's a nice diagram. Okay, that's the group still. Okay, so we're still seeing the same thing here. But let's just find a more specific breakdown. Let me get this rather here. There. Okay, Prosus, annual report of Prosus. Okay, it's a Euronet listed global consumer internet group. That's the focus. Internet group. I see they haven't shown it separately as much as they have in terms of Naspers. But yeah, this is probably the best one that I can maybe show you. Okay, in terms of revenue. All right, so here, online sales, classifieds, payments, mobile, food delivery, advertising, shopping, other. Okay, these are some of their segments. Okay, here, headcount in terms of people, and then obviously the breakdown. Right, so if we look at Naspers, remember Naspers is the old, huge holding company for all of this, and then they've obviously split here. Okay, so in terms of the group, okay, through Prosus, okay, notice through Prosus, so in other words, Prosus is part of the group, okay, e-commerce, global, consumer internet portfolio, right, you'll see the same thing as what we had seen on Naspers, okay, because remember Naspers is still a holding company, but remember you have a separate company that's run independently, okay, so Prosus is independent to Naspers, but they're all linked. Okay, that makes sense. Okay, because once upon a time they were all just one organization, one company. All right, so just bear that in mind, keep that in mind, just appreciate that companies exist in order to create value. All of these companies here are existing to create value, to solve a problem, to provide a product, to sell a service, whatever it might be. Okay, so just remember that. That's very important. Okay, so hopefully you understand the main goal of a organization. It's to generate value, right? So if you look at the information here, I want to highlight that description for you. The primary goal of all businesses is to maximize shareholder value slash wealth. Okay, shareholder wealth slash value. All right, that's important. We're not going to be focusing solely on profit. Because as we saw earlier, when we looked at Twitter, you can make a loss and you can still make or generate value. Okay, so please read through the information here. The textbook describes it quite well. As I said, this textbook has been updated. You may be thinking of profit. Okay, profit should be the primary goal, but it's not the primary goal, because if you're only going to be looking at profits, sometimes you can actually destroy value, right? Because if the only motive is to create a profit, then you might be tempted to do unethical things just to maximize profit. And the textbook even provides you with a really, really great example here covering Steinhoff. Here, activity 1B. Right, there's a few notes here regarding Steinhoff and what happened at that company. Right, Steinhoff is a perfect example of a company that was only interested in making a profit and enriching those CEOs and other directors that were running the organization. Okay, so this is an ongoing investigation, but if you do more research about this story, this example, you'll see there's a lot of fraud, a lot of corruption, and a lot of accounting irregularities. Right, so that's obviously bad. Right, so what was Steinhoff doing here? Were they maximizing value? Definitely not. Were they maximizing profit? Yes, they were. Okay, if you go read more about Steinhoff, Steinhoff was basically irregularly accounting for certain transactions to make their profitability look better. But this ultimately destroyed value. If you look at the company's share price, the company's share price has dropped drastically. Right, if you go do the homework, if you do the research, Steinhoff in terms of share price, around 1 Rand a share. Maybe let me show you this. This is quite interesting. Steinhoff share price. Here. Okay, I'm just going to use that reference. Okay, from MoneyWeb. 1 Rand 25, 1 Rand 23. That's the current share price for Steinhoff. Okay, if you look at Steinhoff share price back in around 20, maybe 16 or 17. Let's see if we can find that information. All right, the share price was a lot higher. The highest it was ever was around 300 Rand a share. Okay, and that's still not high. Here's a nice article. Okay, share price from 46 Rand to 6 Rand in under 3 days. Okay, why? Because of the fraud and the corruption. Okay, so when you have fraud and corruption, that destroys value. It destroyed value at Steinhoff. Okay, why? Because the executives were stealing from the company. Okay, they're still investigating and it's ongoing. Right, a lot of those directors are going to have to account for their decisions made at Steinhoff because of the poor financial management. Okay, here they've destroyed value. Steinhoff shares were 46 Rand, okay, when this article was written on News 24, and it plummeted to 6 Rand in the course of 3 days. Okay, here you're destroying value. You're not creating value. Right, creating value is Naspers. Have a look at Naspers share price. Naspers' share price. Okay, this is obviously in cents. Okay, ZAC stands for cents. So take off those three or those 2 digits because obviously this is in cents. In terms of Rand value, Naspers is worth 3,566 Rand per share. That's how valuable the company is. Maybe we can show this. There, MoneyWeb, there. Previous close, open. Over 3,000 Rand a share for Naspers, compared to Steinhoff, currently 1 Rand a share. Okay, so obviously, which company has created more value, Naspers or Steinhoff? Obviously, you're going to be going with the answer Naspers. Okay, Naspers has created huge value. Shareholders in Naspers are very, very well off because their shares are worth 3,000 Rand a share, over 3,000 Rand a share. Okay, does that make sense? Hopefully. All right, so that's just perspective, just to give you all a better understanding of what's happening in your textbook. All right, so coming back to what we were speaking about here, just before we looked at some additional examples. Just remember, I'm just going to recap. Key financial goal of a business is to create value. That's the full stop, the start and the end. Okay, so please, if you are going to answer a question and I ask you about the primary goal of a business, it's always to create value. It's not about profit. You can create a profit and you can destroy value. Example, Steinhoff. You can be an unprofitable business but extremely valuable. Example, Twitter. All right, types of organizations. Okay, when looking at different types of businesses, you have sole traders, okay, sole proprietors, you have partnerships, CCs, private and public companies. Okay, just a note here about CCs. The Companies Act was updated and they actually brought the close corporations in as part of the Companies Act. So currently, as it stands today, the existing CCs will continue to operate, but you no longer have new registrations in terms of close corporations. So you don't have a choice in today's world. All of you can go home today and you can start a sole proprietorship. Okay, you can be your own boss. Okay, you can run your own business. You can sell your own product, your own service, whatever the case might be. Or you might join forces with a friend and you might create a partnership and then you do a business, okay, together. Okay, you're working as a team. You cannot start a CC in today's world. You cannot register a new CC. But the only other option you have would be to either register a private company and to operate in that sense, or obviously taking your private company public, and that's looking much, much, much bigger. Okay, we're looking at companies like the ones you saw here. These are all public companies. Okay, all of these names here. All right, so what is a sole proprietor? Please read the description that you can do on your own. Just to summarize, a sole proprietorship, it's a one individual business, and that's it. It's one owner. It's owner managed, owner controlled, owner everything. Okay, so that owner owns the business. They own the assets, they own the liabilities, they own everything. They get the profit, they have to pay the loss, etc. Well, pay inverted commas the loss. They take the knock. Okay, partnerships, 2 or more. Right, you do get special partnerships where you can have a large amount of partners. Right, generally 2 or more. Okay, there is a certain limitation on it, but certain professions like accountants, lawyers, doctors, okay, they can form bigger partnerships. CCs, okay, not so important because, as I said, you can't register new CCs, but the existing ones continue. Right, and then you've obviously got companies. All right, both private and public. Right, and obviously public and private companies can have many shareholders. Okay, obviously private companies are limited in terms of their shareholders, right? And it's private, so you need to know a shareholder in order to become a shareholder. Public shares can be bought and sold on the JSE, right? So public companies, for example, going back to the list, any of these companies, right? If you wanted to, you could buy shares in those companies. You could be a shareholder of Process. You could be a shareholder of Naspers. You could be a shareholder of any of these companies. Okay, I'm just focusing more on those 2 businesses because they're more media specific. Okay, those are media companies. Most of you are probably going to be working for a media company rather than a mining company or a bank or a petroleum company, Sasol, okay, etc. Okay, but yeah, I mean, you could end up working anywhere really, but I'm just trying to keep it more focused on media because that's the industry you're going to be working in. All right, so that's just a note about the different forms of ownership. Maybe just to add a note here, sole proprietor, we call them an owner. Partnership, we call them partners. CCs, we call them members. And then obviously companies, we call them shareholders. Okay, and there are many shareholders that can be involved in a company. Okay, so please go ahead and have a look at all these different advantages and disadvantages. There are activities later on the textbook that you are required to complete. And if you have any problems, you need to communicate with me on Cole Campus so that I can address those concerns. Right, so if you look at advantages and disadvantages, that applies specifically to sole proprietorship. In other words, when you're a sole proprietor, it's easy and inexpensive to start. Okay, all of you can do this today. Okay, go home and start your own business. It's easy to change the structure. Okay, in other words, there's not a lot of paperwork that has to that's involved. Okay, compared to something like a company. Okay, there's a lot of paperwork, there's a lot of admin, there's a lot of legal implications there. Profit, you keep the profit. You're the owner. Whatever you make, you keep. The owner has full control. You can do whatever you want, however you want, whenever you want. It's totally up to you. Customers generally remain loyal to the owner because it's personal. It's personalized. Okay, you're dealing with the owner. You're dealing with that individual. And then you have other disadvantages which you need to be mindful of. Okay, unlimited liability. If something happens, you are going to have to take responsibility for that business. You're responsible for the debts, okay, the liabilities, all of that. It's your responsibility. It might be difficult to obtain finance because you're an individual. You can't sell shares. Okay, you have to get investment through your own means. Okay, so your own money, your own capital. You can't use other people's. You can take out a loan though, but that's different. That's look at the liability. Okay, here we're looking at the investors. Whose capital? Unable to take advantage of the economies of scale. Okay, obviously it's a smaller business, and if you succeed or fail, the business lies on or rests on the company. Okay, so not company, on the owner. Okay, unlike a company. Okay, companies will continue forever and ever. Okay, if they are managed correctly. Right, some of these companies that you've seen here on this list are very, very, very old. Okay, some of the banks are some of the oldest companies in South Africa. So Standard Bank, over 100 years old. Is there another bank here? I'm looking for something like FNB. FNB also over 100 years old. Okay, there, First Rand. Here's it. Okay, First Rand. Let's see. Here, when did banks start in South Africa? All the way back in 1921. Okay, well, this is the South African Reserve Bank. These aren't the commercial banks. Let me try search for something that we can actually find. Let's say Standard Bank. Standard Bank, founded. There we go. Perfect example. Here. Standard Bank founded back in 1862. Right, so over 100 years old. Right, here, Absa. Okay, Absa is quite new actually. Here, Nedbank is 1888. That's an old bank. First National Bank, 1838. Also, see, right, a lot of the banks in this country have existed for several years. Lots and lots and lots of years. All right, so obviously structure does change and things do happen in mergers and takeovers and so on. But just to keep it simple, coming back to the point that we were discussing here, sole proprietors live and die with the owner. Okay, companies can continue forever and ever. Okay, Naspers, Prosus, those companies can last forever and ever. Okay, same thing with partnerships. If you don't know what a partnership is, please read the textbook. It will describe what a partnership is. Again, you do need to know what the advantages are and what the disadvantages are. Right, so obviously if we're bringing in more people, it's still easy and inexpensive to start, but now we have more capital because now we can share. Okay, so 2 people starting a business instead of 1. There should be a bit more capacity. Okay, so now 2 people can work on a business instead of 1. It's still easy to create, okay, not a lot of legal. You're combining skills, etc., bringing people together. All right, there's shared responsibility and shared decision making, right? But with those positives also come negatives, right? So you are jointly and severally liable, right? So you've probably heard that you need to choose your partners wisely. Okay, that's probably relevant in the real world in terms of dating, but even more important in terms of business. Okay, you don't want to get into business with a bad partner, because if they're irresponsible, you land up with the debts, you land up paying for the other person's mistakes. Okay, and the same actually happens in a relationship. Okay, choose your partners carefully. If you get married and your partner's irresponsible, if you're married in community or property, jointly and severally liable. Your spouse's debts become your problem. Right, so choose your partners carefully. Make sure you choose your partners very carefully if you're starting a partnership. Okay, if you're forming this type of business. Right, profits have to be split. Okay, so before, if you were the owner, if you were the sole proprietor, you kept everything. Now you need to share. Okay, so a bit of a disadvantage because you don't get all the profits. It's split between the partners. There is a risk in terms of disagreements. Okay, so it's like a marriage almost. Okay, think of a partnership like a marriage. Okay, sometimes people argue and there are disagreements. Same thing can happen in business. And a partnership can dissolve. Okay, so same with the marriage, a divorce can happen. Same thing happens with a partnership. Okay, a marriage is actually a partnership. It's a contract. Okay, believe it or not, you've actually got to sign a document when you get married. Same thing happens in business. When you start a partnership, you've got to sign a partnership agreement. Close corporations, you can read about them here if you don't know what they're about. As I said earlier, just remember that CCs do not exist. Well, let's say new CCs, I should rephrase that. New closed corporations cannot exist after the change was made to the Companies Act. Okay, existing CCs still continue, but new ones can't. New ones can't be registered. Okay, again, just some advantages and disadvantages. Easy and inexpensive to start up. Running the business not as complicated as companies. It has its own separate legal personality. That's a very important point that I want to write down here on your notes. Okay, CC, separate legal entity. Okay, for these two, no. Separate legal entity. For companies, separate legal entity. Okay, so what does that mean? Well, remember we said companies can exist forever and ever. Okay, so for example, Standard Bank over 100 years old, First Rand, Nedbank over 100 years old. Those two, okay, forms of ownership have separate legal entity, meaning the company is separate from all the owners or the shareholders or the members. Sorry, I see there's a typo here. Okay, the members and the shareholders are separate. The business is separate. That doesn't apply here when you're looking at a sole proprietor or a partnership. Right, members are not jointly and severally liable. Okay, so again, something we can add to our notes here. Here you had unlimited liability. And these are things that you would have covered in other subjects as well. Unlimited liability for CCs and companies, limited liability. Okay, limited liability means that only what you've invested you will lose. Okay, you won't lose your private assets. Okay, for a sole proprietor or a partnership, they can attach your private assets because you are an individual. Okay, you're not a separate legal entity. Okay, CC does not cease with the death of the member. So members can change, members can die, members can move on, members can retire. It doesn't matter. The CC can continue. Disadvantages: more expensive to start, limited liability. Okay, well, limited number of members, I should say. Sorry, apologies for that. Limited liability is an advantage. Okay, I read this incorrectly. Limited members. Okay, so limited number of people helping in the organization. Members can be personally liable if the losses are irresponsible. Okay, so in other words, fraud and corruption, for example. All members have to give consent okay, when making decisions, okay, and when acquiring interest in the business and so on. Right, private companies actually very similar to a CC. Actually, if you read a lot of these, you'll see the same things come up. Limited liability, not as complicated to start it as a public company, okay, but it's more complicated than the ones that we saw before. Business does not dissolve, so in other words, it will continue. It's a separate legal entity. Okay, you only need 2 shareholders to start. It's easier to raise capital, and you don't have to require your you're not required to publish your financial statements. Disadvantages: it's more difficult and expensive to register. You cannot sell shares to the public. There is a private company, so there is limited liability, but okay, those shares cannot be bought and sold to anyone without the agreement of the shareholders. Private companies are also subject to more legal requirements. And then you have the last type of business, which is a public company. How do you know if a public company is public? Well, you'll see they only have the Postfix Limited instead of Pty Ltd. This is something else that I can add to your notes here. Okay, so if it's a private company, Pty Ltd. If it's a public company, Ltd. Okay, so in other words, proprietary limited or limited, okay, in terms of its postfix. Okay, so what comes after its name. Okay, so it'll be like Naspers Limited, Prosus Limited. Okay, I think that's even noted here on the list here. Yes, see? Limited, 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 limited. Do all of you see that? Sunland Limited, Goldfields Limited, MTN Limited. LTD stands for a public company. All right, please go through these advantages and disadvantages. You'll see they're very similar to a private company, but a bit different. Advantages: they can obviously sell shares to anyone. Okay, they have the limited liability. They're a separate legal entity. The shares can be bought and sold freely. You can raise a lot more capital. Cost of financing can be cheaper because you can raise equity. Companies are able to be taken over by other companies and get larger economies of scale. So you've got larger, much bigger businesses. So that's definitely a competitive advantage. Disadvantages: it's very complicated, very complex, and very expensive to set up and to run a public company. They have to publish annual financial statements, so that's another burden in terms of administration. And there's less flexibility in terms of decision making because shareholders need to vote and there needs to be approval. Right, there's a really great example here. Look at different types of companies in a media environment. So please have a look at some of these examples here that the textbook has provided you with, and have a look at some of the activity questions as well. Just in terms of role of the financial manager, what do they need to do? If you go through and you read this information, you'll see that the duties are important here. Okay, so making financial decisions. That's very important. In other words, what are we going to be using in terms of capital? Are we going to be using more debt or more equity? So are we going to borrow more money, or are we going to be looking for more investments? Once funds are raised, what are we going to be doing with those funds? Investment decisions. Where are we going to invest that money that we've raised? And then also decisions regarding profitability, right? So in other words, the day-to-day running of the business, income, expenses, cash flow, etc. And these are things you'll see more in other chapters as we go. All right, and then the last thing we need to deal with in terms of content is the agency problem. What is the agency problem? Well, to summarize that for all of you, the agency problem is a conflict of interest. That's the simple explanation. Okay, where the managers or employees don't always act in the best interests of the shareholders, and vice versa. All right, so here's a simple example. Okay, let's think about retrenchments. Okay, so a lot of this has happened actually more recently in terms of COVID and what's happening from a South African economy point of view. Okay, so retrenchment at businesses. Right, so let me ask you this question. If you were running a business and you were a shareholder making decisions, would a shareholder want retrenchment at a company? Well, the answer is yes. Why? Well, shareholders want more profits. If shareholders are going to retrench employees, that's going to add to the profit of the business because you'll have less expenses. So shareholders aren't going to mind retrenching staff. But if you are a manager or if you're an employee, you wouldn't want any retrenchments. That's something that you wouldn't want to do. Right, so these are things that could become problematic in terms of conflict of interest. In other words, what decisions does a manager need to do, and is that in the best interest of the shareholders as well? Right, and that's the big debate. So the agency problem, if you think of the word agency, agency means you're giving someone else authority to act on your behalf. And sometimes those individuals that you give authority to don't always act in the company's best interest. So who gives who agency? So shareholders give the, in inverted commas, running of the business to the managers, the executives, etc. Right, and those managers and executives don't always act in the best interest of those shareholders. Because what's stopping the manager for paying him or herself a nice big bonus? Is that in the best interest of the shareholder? Not actually, because the bigger the bonus, the less profit you have. Okay, because you can't have more profit and pay out a bigger bonus. Okay, the bonus is going to come out of the profit, obviously, right? So this conflict of interest is looking at the agency problem. And that's exactly what the textbook is describing here. It's looking at I want to use the word conflict of interest because it describes it well. Okay, where the one individual might not be making the best decision in line with the other person's interests. Okay, and that's something that you need to apply in context in different scenarios. Right, so please have a look at these activities. Please make sure you've completed them. And if you're having problems with them, you need to let me know via Cole Campus or email, okay? Or even maybe on the WhatsApp group, depending on when those groups are created for you. All right, so just remember to go through these activities. The answers are in the textbook, so you can review to see if you're on the right track. Right, B is a really nice activity because you have context here. I spoke a little bit about this earlier when I talked about Steinhoff and the whole idea of creating value. And then please have a look at the multiple choice questions. Okay, I'll help you with the first one. What is the primary goal of the business? To maximize profit, maximize market share, or to maximize shareholder wealth? Okay, obviously the answer is number C, maximize shareholder wealth. If we go back to your textbook, we saw that right at the beginning. Primary goal of a business is to maximize shareholder wealth or value. Value first, and then those companies will automatically become profitable. Very similar to Twitter, okay? Loss after loss after loss prior to 2017. Before 2017, since Twitter was created, they never made a profit. Until 2018, 2019. That's when they started making a profit. All right, so value first. Value, value, value. The more value you create, the more profit you'll have later on. All right, so there's lots of multiple choice questions for you to complete. Please make sure you've done them. There's another activity here looking at the debate over which form of ownership is most appropriate for a business in the media industry. And here you can maybe do a bit of research to see if you can identify other types of businesses in your industry and maybe give them some advice. Right, should we go sole proprietor or partnership or CC or company? Okay, there are 4 main forms of ownership. Okay, remember, CCs exist, they continue to exist, but we just can't register new ones. Right, and then please have a look at the conclusion and summary just to make sure you're understanding all the content in chapter 1. Thank you for watching this video. I hope you found it helpful, and I'll see you again in the next video.